Hi everyone, my name is Amelia from the Brand Experience team and welcome to another episode of Providend's Money Wisdom Podcast. And today we have Chris with us, our CEO and founder, to talk about his latest Business Times article. And this one's really interesting. It's called Achieving the Highest Probability of Success in Money and Life. So hi Chris, welcome. You just got back from Guangzhou. Welcome back.
Yes, but I'm not going to talk too much about Guangzhou. The article I started with Guangzhou.
So in your article, what stood out to me was the two incidences where you talked about that really dumbfounded you because these two groups of people almost lost their life savings or could have lost their life savings. So, and rightly so that you were dumbfounded. So what inspired you to write the article?
Yeah, I mean, the first thing was that, and for those of you who haven't read the article, I think you should go and read it. Okay, because I basically started the article by talking about two stories that I heard when I went to Guangzhou. I landed at Guangzhou on the 8th of October and the markets in China was rallying. And this was after 3 years of drought. And then on the same day, I heard that, basically the investors, they were buying into the rally. They got all excited. They don't want to miss this rally. And they started buying. And advisors were encouraging them to buy. And I was quite taken aback in that. I mean, I always know that there are people who will market time. But then to hear, I mean, you got to read the story to know why, I was dumbfounded, right?
Read the story.
Yeah, but I mean, in Singapore, we have advisors doing roadshow in the malls. But this is ultimate, right? Advisors setting up a makeshift store in a Pasar Malam, our version of a Pasar Malam, right? Or which is the night market in China. And then just in the night market, they started getting people to open up accounts and then getting people to trade the stocks. So I was like, wow, this is at the highest level. And what really inspired me to write was that just about 6 months ago, I just went to Guangzhou then and I was invited to give a talk to the industry, telling them how to mitigate the volatilities of the Chinese market. And the advisors there were all very interested to know, how to do investment advisory the right way. And then suddenly, when the market starts to recover, it's like everything that I've said is like forgotten. Of course, it may not be the same advisor, but to me, it was a contrast, right? So I decided to write the article to share with people that, these things about being caught up in a rally is still very much present. And there could be advisors even in Singapore that will encourage you when the markets are down, they ask you to sell. When the markets are rallying, they tell you that this is the best time to buy. But this approach of investing is definitely not an approach that will give you a good probability of success, right? And I wanted to share what the approach should be. And that is why I wrote the article.
I see. So would you say, is it human nature for us to be caught up in all these short-term, like enticing news and have you yourself, maybe in your younger days, got caught up as well?
Yeah, I think if you are not properly informed and if you are not investment literate, or if someone somehow always present to you that investment is a speculation, you must buy in at the right time, you must sell at the right time. I think it's quite normal that people will believe in this, right? And that's why it seems like investment is always a black box. People are afraid to go into investment because they think that investment is like that. You need to find the best opportunity to buy and sell. So I think it's quite natural. Well, for me, I think I've shared this before. When I was much younger, in the 90s, and in the 90s, the stock markets then were in a bull run, right? That period was called the Roaring 90s. And in Singapore, during that period, and if you're listening to this and you are my generation, you will know what I mean. There were just IPOs being released almost every week. And nobody will read the prospectus. Nobody will read the prospectuses. As long as an IPO, we will rush in to buy. We'll just go to our ATM and then, whatever money we have in the bank, we'll just buy as many lots as we can afford. If we buy 10, we may not get 10, we may get 3 lots. And back then, the story is very simple, right? You just buy whatever you get on the day of listing, just sell it. And the message to all the investors was, don't hold it for too long, sell it. It definitely will make money. If you hold longer than 1 week, people will ask you, why you want to be a shareholder? You should just sell it and make money.
Wow.
And so that's what people did in the 90s. They buy IPO, they sell it on listing, they take the money, they go for a good meal. Next week, they will do it again. And believe it or not, I did the same thing. So I also bought because at that time I wasn't in the industry, I wasn't that literate. So I was doing the same thing. But unfortunately, I went in late. Meaning to say, I only started this buy IPO, sell IPO thing at the tail end of that run.
I see.
So all the IPOs that I bought, I can't remember it now, but I definitely know that most of them, if not all of them, lost money. That means to say that on the day of listing, it was on the day when it was being listed on the market, you can trade. The price was lower than what I bought, so I lost money.
Wow, do you lose like a lot?
No lah, at that time I was young, so maybe it was a lot to me back then.
Your proportion of your wealth back then.
Yeah, I mean, of course, today if I look at the amount of money I lost, is not that much lah. Yeah, but it's a good 5-figure, I would say.
Wow, for back then, 90s is quite
a
lot
of money. Yeah, it's probably low to mid 5-figure. I can't remember exactly. Maybe 30 to 50,000, thereabout. But for a 20 something years old, I think that's quite a lot of money back then. But of course, today, if you look back, okay lah.
It is. So I believe actually we would have some clients who have actually made money back then.
Possible.
And if they are our clients, how would we actually ask them to focus on their long-term goals?
Well, I think the first thing is that the long-term goals must be worth focusing on. The long-term goals must be worth staying invested for. So I think that's the first step. Right? And that's what we meant when we say make life decision first. Right? So the life decision, the long-term goals, life goals that you make, the long-term life events that you want to achieve, they must be something that is worthwhile. The life goals, we call them Ikigai goals. The life events will be like retirement, funding, children education. That's the first step, right? Because if it's not something that is worthwhile staying invested for and going through the pain of riding through the ups and downs, then people won't stay invested, right? So that's the first step. The second step, of course, after you have made your life decisions, is to then adjust your financial decisions to support their life decisions. So that's really the investment bit, the financial planning and the investment bit. So for us, for the investment bit, we try to put our clients in the correct portfolio. When I say correct portfolio, it means the portfolios that will give them the returns that they need, to give them the money that they need to do all those life goals and the life events, right? So once we know the returns that our clients need, and based on our understanding of our clients' ability and their willingness to take risks, we put them in a portfolio that theoretically should not fluctuate so much that they can't take it, and so they can stay invested. But I use the word theoretically because it's just theory. When everything is doing fine, theory works. But when the markets become very volatile, the theory gets thrown out the window, right? So then how we help our clients stay invested, of course, we take them through a process of reminding them of the important life goals that they are staying invested for, that is worthwhile staying invested, is non-negotiable. If you don't stay invested, you're not going to achieve all these very important things, right? And then understanding our clients, their past life significant events, well, we try and help them psychologically to stay invested. So the theory is the head. We put on the portfolio that we think theoretically they should stay invested. That's the head. The heart is the coaching part. The emotions. Making sure that the theory, the head and the heart connects. They stay invested and then towards their important life goals. So that's how we do it. It sounds simple over a podcast, but it's actually really quite difficult, especially the emotional aspect, the psychological aspect. The head part is usually the easier part. the hard part,
It's the heart.
the hard part is hard. Yeah, pardon the pun. But I think that's the true value of a good advisor.
Yeah, and okay, I would like to bring the audience to like look through it through the lens of a case study. So let's say we have John and Amy, couple in their 50s, and they walk through the door. They say, Chris, I want to talk to you about my retirement plan, my estate and legacy planning. So how do you go about discovering their life goals, Ikigai goals, and so that they can actually focus on living the life that they want now and save enough for the future?
Yeah. Again, in a short podcast like this, it's impossible to give the full colors, but I'll just say that we spend quite a bit of time asking probing questions. Sometimes the questions may not be that comfortable, but it's really to help clients clarify what are their life goals, their Ikigai goals, what are the important things to them in their lives, right? And since we talk about Ikigai goals, you know that there are 8 sources of Ikigai. There are 8 sources that will give you that Ikigai feeling, right? I mean, I've written an article about it. We can put it in the podcast notes. You can go and read it. Yeah, but one example of sources of Ikigai or a source of Ikigai is the joy of little things, right? So we would want to know from the clients through our discovery process, what are some of the little things that they really treasure that gives them that meaning to life. Something that they wake up for and they look forward to doing. And these are things that they want to do now, not just in the future, but they want to do right now. Another source of Ikigai would be things that give them meaning and value. Another source would be things that gives them the feeling of growth, right? Things that they can make, rather goals that they can make in the short term and long term that gives them a sense of growth. So we ask questions on what are some of these things. And once we are able to identify these things, then we will know what are some of the things they have to do now and they need money to do now, right? So if they need money to do now, we need to set aside money that they have to do these things. And then whatever is left behind, then they can, or whatever money is left, then they can invest it for the future to do the things that they want to do in the future. And also to achieve their life events, like, for example, retirement, buying a property, right? So it's really a balanced, it's a trade-off, because if you want to do so many things today, then you just have, you may not have enough money to save for tomorrow, right? But if you push everything to tomorrow, then you have to give up some of the things that you wish you can do today. So what we are really trying to do is to give or to help clients make that trade-off, because at the end of the day, we have limited resources. There's just so many things we want to do.
And sometimes things change as well.
Yeah.
Their priorities change. And that's why these lifelong conversations are so important.
Yeah, exactly, right? So you can say that, well, there are certain things I want to do right now. These are the joy of little things I want to do now. But along the way, after 3 years, 4 years, 5 years, these things may change, right? And so the plan that we put for our clients, they are not cast in stone. I mean, along the way, we must be prepared to change it so that clients will always have a chance to do what they want today and still be able to achieve what they hope to achieve tomorrow.
Hi listener, we hope you are enjoying this episode and podcast series so far. At Providend, we have been sharing our thought leadership content through various mediums beyond just this podcast. If you are interested in knowing more, check out the link in the show note to subscribe to our newsletter today. Thank you, and let's get back to the episode.
So this is a bit of a surprise question. What is one of your Ikigai goals that has probably changed over a few years?
This is a surprise question.
It is a surprise question, but I'm sure our audience would want to know. And could it be family? Like last time your Ikigai goals was to go on more holidays, but now maybe you want more space.
Yeah. Okay, so I wouldn't say it has changed. But at least at this point, I don't see how I can achieve it. And I've shared it before. I've shared it on radio. One of my Ikigai goals is actually to, go to Batam and then build sort of like a huge house because I can't afford a GCB in Singapore, right? So I'll build like the size of a GCB in Batam. And then I always had that dream of, because I've shared many times that one of my life goals is actually to do life coaching. And I wanted to divide the property into two. One is for work, and then the other side is my private space with my family and all that. And that have always been something that I look forward to. And maybe I just take a little bit of time. To unpack this, why did I have this sort of like Ikigai goal? It's because 15 years ago, I went for a workshop at this place called Jandabaye. It's actually the foothills of Genting. And there was this retired Malaysian army colonel running a workshop. And it is a sort of like a workshop that, it's sort of like a life coaching workshop that helps you discover yourself. I spent 5 days there.
Wow.
I had a chance to go to his house. He built a stone house. It means a house made of stone. You can actually see the big stones there.
Wow, in Genting.
In the foothills of Genting.
Wow.
And right behind the house, there was a stream running. Some people will find it very noisy, but I find it therapeutic because it's natural. You can hear the stream running, the water. And because the stone house is so cooling, and I was like, wow, I really want to do this. When I retire, I really want to do this. I want to have an estate by myself. I can, run courses, do life coaching, and then I have my private space. That's how I sort of got inspired, right? But I think it's going to be very difficult for me to do that now. I haven't thrown away the idea, but I'm prepared to change that Ikigai, right? Because certain circumstances in life has changed. Certain member of my family is not feeling too well, I think we all agree that Batam is not exactly the best place in terms of medical support, right? So it's going to be quite difficult for me to be there and live that kind of life. So I need to make adjustment. We always say living a good life is to be at the place where you belong with the people you love. And I can change the place where I belong as long as I'm with the people that I love. And it doesn't have to be Batam. I probably have to settle for a smaller space here and still do the same thing. So it's a very long answer to your surprise
Thanks
question.
for sharing, and sorry for the surprise question, but you answered it really well, and thanks for sharing. So, and I'm sure that there are many of our stories, client stories that have also been like that. They took a turn, and our client advisors have the privilege of actually helping them to pivot and to talk about all these difficult conversations.
Yeah. And sorry to interrupt, but that's precisely why, wealth advice is not about buying products.
Yeah.
Because things change. Markets change. I written it in the article. We have to be prepared for changes in our life circumstances. Goals change. Geopolitical events, markets change. If you just buy a product and you depend on that product to support what you need to do, you might be stuck, right? So wealth advice is not just buying products. It must be a well-crafted plan that is robust, that allow you to change when your circumstances in life changes, right?
Yeah, so of course this reminds me of the previous podcast that Evelyn did also. She said the only constant in life is change. So that's where we have that opportunity to always be there for our clients to talk about it.
Yeah, as you get older, you definitely realize that's true.
Yeah, and that you can't control everything in life. Yeah, midlife crisis for me, so I definitely am figuring that part out.
Absolutely. We can do as much as we can to have some amount of control. I think that's important. But we all know that as humans, we have no control. God controls everything in life. We can only do our part, right? And be prepared to change. That's why they say man can propose, God disposes, right? So the plan must be flexible enough for you to change when God decides to change your course in life.
Okay, so for my last question, when Providend has been there for our clients for over 23 years, so what do you think is that one factor that caused our clients to trust us so much?
Can I say 3?
Sure, okay. Go ahead.
So, I can go on and on. There's a podcast episode coming. Helen told me that it is going to be in November because we're going to invite one of our clients. He's been one of our longest clients, or one of our clients that have been with us for the longest time, and he's going to retire. And it's so exciting, okay, because we have the chance to journey with him from when he was just a young executive, right, throughout his career, and now he's ready to retire, and he attribute a lot of that to us. And so we had a privilege of inviting him to share the experience, right? So I'm going to leave that the next podcast, or the next podcast. Is it the next podcast? It's the next podcast. Okay, so look out for it. This is me selling koyo. What was your question? Oh, the 3 factors. I'm sorry.
One factor, but you want to say 3,
okay,
so I let you say 3.
Yeah. The 3 factors are small cap value and the 3 factors. Okay, I think it can be summarized in the 3 C's. So I think the first C is compensation. So since day one, we have always been a fee-only firm. The one thing that a fee-only firm does is that it gives clients the assurance that we remove all possible conflict of interest, right? So our clients can trust us that whatever advice we give to them, it is definitely in their interest. There's no reason for us recommending things to them that we get commissions or product providers will pay us more, or because we are going for, if we sell this, we go for incentive trips, and all that. The clients don't have to worry about this at all, because no one else pays us except for the clients. So that's compensation. We are fee only. We don't take any commission. That, I think, is the first level of trust. But a fee-only advisor doesn't mean that he is competent, because you don't take commissions, but then you can be incompetent, right? So the second C is competence, right? I think over the course of the last 20 years, we have been showing our clients. Of course, when we first started off, I would not say that we have not made mistakes, but each time when we make a mistake, we always admit to our clients that, okay, we have made a mistake, and then we improve. And over the last 23 years, through various crises, we have shown our clients that we have stayed true to our mission, and we are competent in the way we plan for them. Our way of planning has improved tremendously over the years. So that's the second one, competence. And I don't want to spend time talking about why I say we are competent in terms of investment or that. The only thing I'll say is this, that, and I've said this many, many times, I personally believe that no one advisor is able to do comprehensive wealth planning for the clients. It's impossible, right? Because no one person can be an expert in every practice area of wealth management. It's impossible. If it's a professional practice, there must be generalists, there must be specialists. And that's how we have built Providend to be, right? We have, of course, client advisors who are very competent in the area of general wealth planning. We have a solutions team that is, they are specialists in insurance, in estate, in legacy planning, in cash flow planning, all this kind of stuff, right? And then we have an investment team that specializes in investment management, right? And as a team, because we put the right people in the right place, we show competence to our clients. Our investment returns have, I would say, done decently over the years, right? So that's the second C that established the trust between our clients and us. And I would say that the third C is culture. I think our people, they are sick of me talking about culture all the time. I'm like, we have a few new colleagues who just joined us recently, and they told me that whenever we meet the more senior staff, everybody's been telling them that culture, our Providend is very big in culture. I think they are so sick. But why is it so important? Because, you can have a fantastic compensation. You can hire people that are very clever and very competent. But if we don't have a correct culture that inspire people to do the right thing, we don't have a culture that encourages each other, a community that encourages each other to do the right thing. And not when you sell a super expensive product, everybody clap their hands and say, oh, wow, you've done so well. That's not our culture, right? But we have a culture whereby people push each other on because they have done the right thing for the clients, then everything comes together, right? So, and when our clients meet our people, they know that their client advisor is someone that they can trust. It's not just Chris. Whatever Chris says is being carried out by the client advisor, right? So if these three things are present, I mean, for us, they are present, which is compensation, competence, and culture. So when we put these three C's together, well, I think we have a much better chance. And I hesitated for a while because I think I don't want to be so arrogant to say that's why client trusts us. But all these years, we are able to get our clients' trust, and which is something that I'm very grateful for. I don't take for granted, and that is why even though people are sick and tired of me banging on culture every time, I have to do it, right? Because it's our clients' hard-earned money. And we cannot betray that trust. And of these three, if I have to choose one that I will
non-negotiable,
it will be culture. Yeah, because if we get culture right, I think the two will get it right.
And I don't think we're sick of it, right, Helen?
Is that a politically correct answer?
No, I don't know. Can you see from my face?
My
sincerity.
I hope that people are not sick of it, and if you are Barry, you are Providend staff listening to this, I hope you understand why we are so big on culture. I mean, we are not a cult, right? We are just trying to make sure that we are very serious about protecting our clients' monies. $1.3 billion is a lot of money. Sometimes I get scared. I don't know who I shared with, but sometimes our client advisors will report, oh, I just got a client, this client invested this amount of money. And I always say that, it's exciting that you have business. Of course, we are a business, and it's always exciting that you have new monies coming in, we are doing well. But every $1 that comes into the firm, to me, it's like, it's $1 more of responsibility, and it's very scary. Because in that $1, there are a lot of hard work in that behind that $1, clients' aspiration, dreams for their children, promises they make to their families, and so it's quite scary, and that's why we are so. We bang so hard on culture.
I think that's a really nice way to end the podcast. Because clients trust us because they know that we value their money, and that because our culture is as such, we have a healthy culture, and that will also in turn flow into how we treat our clients.
Absolutely.
So that's all we have for today's episode, and thank you so much, Chris, for coming on this podcast to talk about your latest Business Times article. So I'll put the link down below. It's about achieving the highest probability of success in money and life. So if you like this podcast, please rate it on your favorite podcast platform and share it with a friend. And with that, we've come to the end, and we'll see you in the next episode. Goodbye. All analysis, views, or opinions from interviews, recommendations, and other information broadcasted, podcasted, or published herein are provided for general information purposes only. Information expressed does not take into account any specific situation, particular needs, or objectives, and should not be construed as specific advice or a recommendation. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Providend Limited does not accept any liability for any loss whatsoever arising from any use of the information broadcasted, podcasted, or published herein. All contents and information contained herein may not be copied or reproduced in whole or in part by any means without prior consent of Providend Limited.